Guys, another day now to look at the stock market again. Currently, I'm looking at the Home Depot. This is part of the US stock market. Now, on this particular asset, if you look at it, actually you can see stocks most of the time they have the tendency of ever going to the upside, which makes me more uncomfortable always to go short on them, but I'll prefer to go long. So currently we're looking at the Home Depot, and we are approaching a higher time frame demand. We are approaching this particular, we'll call it the monthly demand here, drop base rally. And this demand currently price sitting on this demand. And as you can see, move the watermark on the screen so that you can have clear visibility. So just a second, just quick one, get rid of this. Right there, I think this is okay. So we have this monthly demand. If you understand the law of demand and supply, we have drop, base, rally. In terms of direction, you can see the major direction is this one, major direction, rally, correction, rally, take out the previous high, you're back here, and probably as long as this pivot remains strong, we're looking forward for expansion to the upside. Okay, we're looking forward for an expansion to the upside. So the market is currently on this pivot, and we're looking forward to say if this stock market is going to remain bullish, then it should not break this particular pivot point. We're looking at this particular demand. So on this demand, uh, we don't know if it's discount or it's not, because look at this, the market is falling. The demand is acting as a flow to catch the falling knife. Nobody's sure. I'm not sure if this demand is going to work, but we know one thing, that the stock market most of the time they are bullish. 90% of the time they go higher than they fall, because stock traders or investors they make money when this type of assets go up. When they go down, the market's crashing and possibly they're not making money or they're exiting their long positions. So here we cannot drop like to the weekly chart and try to look back at that same level. If we look at this area, we see we have a drop, a basin, a rally here. So we want to pick the demand here. There's two ways how you'll pick this demand. You can decide to take it from this could be the weekly demand. But if you go back to the basics, what is this? Drop, base, rally. So this is a demand, but honestly, I share this setup on my community. I need to do some correction. This is a demand here, but the originality of this demand is actually here, right? That's where it is. You see, after drop base rally, pullback, then the rally to the upside. So here we'll say that around this area, we can go to the preferred version, all right? Preferred version there. Then we mark this basis as our weekly, all right? Weekly uh, demand there. So that's a weekly demand on higher time frame. Now, unfortunately, when it comes to stocks, there are some levels that are not always good on daily chart. But guys, stocks are the cheapest asset to trade because you don't need a lot of money in these markets. All right, so you can see here, if I go to a daily time frame, I know if I want to trade, I could pick this extreme demand, but because it's a larger time frame, market is falling into this area for the first time. I want to take it from the weekly. But as if you're not comfortable, guys, drop all the way to the daily and take this small zone, this level. Let's make it green, small level. Will green be visible really? How to make it green? Something like that. That one is a little bit visible. So this is we can say it's a demand that is covered by the monthly slash weekly time frame. So you can take it from there. But personally, I'm gonna take it from, I'll say from the top weekly chart. I'm comfortable with the weekly. In this case, I'm comfortable with the weekly demand. So looking at it here, right, looking at it here, and I need to take a screenshot of this because I need to reshare this in my community. I did I did share it earlier, but the zone was not properly marked, so that's the demand. We want to look at it. I'll bring back the watermark there, right? Screenshot this one. Take a screenshot, download. Okay, now it's downloaded. Now look at this. The other factors that make me to look at the stock market, what I like to look at the stock market, it's not just like demand and supply. Fundamental as well, I'll want to see, is this level cheap to buy? Is it expensive to sell from? Because if the zone is expensive, then it's not a good zone to buy from because you pay more for less. I want to buy at discount and actually at what we call the how do you call it, at an area of low value. So when it comes to the stock market, and this is not the stock market, any market, when you look at it in terms of value. You should understand how bond prices affect anything that you can trade versus the dollar. So when it comes to bond prices, this one is an assignment you can go back and check. When bond prices falls, it means that interest rates would go up. And when the bond prices goes up, it means that the interest rates will go lower. So when you look at this market, I want to compare it with the prices of bonds. And here, that's when I pull out my tools. Now, when I look at my tools right here, where is it? Down here, and this is what you see down here. This is called valuation, and when it comes to valuation, I'm actually like, when it comes to stock market, I'm just comparing it with the value of the dollar. So you see here DXY. If you go to the chart, sorry, my screen is not clean. Look at that. So you see we have the dollar right there, and also we look at that's now the DXY. When you go to the second one, where's the second one? So second, guys, we need to go back to the second one. When I look at the second one, this is called ZB. ZB, you can check it on Google. This is the US Treasury bonds, 30 years US Treasury bonds. So when the bond prices go down, when they fall, the interest rates goes up. And now when bond prices and the dollar fall, it means that the asset is cheap and it can easily be bought. Look at this. I'm looking at this. In fact, I'm on a weekly chart and I can give you a small, quick back test. Look at this. We are undervalued. We have the red line there. This, like, I'll call it, this one is an index whereby we have we have we have the index, like the red line. If I go below the red line, the asset I'm looking at, it's cheap and I can buy. When I go above the green line up there, it means that the asset is expensive and it's worth to sell. Now look at this area. So here we are undervalued. We are undervalued here. We are undervalued here. We are undervalued here. We are undervalued here. And you can say I've hidden the market so that I'm not just like copying what's happening on the market. Here, undervalued. Again, where? Okay, we can see a lot of areas here almost undervalued. Sorry. Sort of that to repeat. Here, almost undervalued. Here, undervalued by treasury bonds. Here, almost undervalued versus the dollar. Here, undervalued by all of them, interest rates and the dollar. And we go back to the left, we can check, look at this area, we can say here we undervalued again, here undervalued again, compared to the three, the dollar and the treasury bonds. And lastly, let's just get here. You can see we have gone back all the way to 2018. Now let's bring in the market. This means that every time we are undervalued, we are looking for a rally. So every time we are down here, it means that the asset is cheap. And when I have the demand, probably I can say, let me try to put in a position. So let's bring the market. And I want you to see, you can see everywhere we were undervalued, we got the rally. And this is the weekly chart, guys. Undervalued, get the rally. Undervalued, we get the rally. Here we stayed in this area of undervaluation for a while and we got that rally. Undervalued, rally. undervalued, rally, undervalued, rally, undervalued, you get the rally to the upside. Here, undervalued, rally, undervalued. And right now, again, we are undervalued, guys. And this means that probably we are likely to get another rally. Who knows? I'm not sure about that. But from the data, we say most of the time, the data doesn't lie. So from the small back test we have done, we see every time undervalued on the weekly chart compared to the dollar and the treasury bond, we see that we get the market pushing higher. Now we can go to a normal day look. You can see if you're undervalued, and you see even on daily. So this means that we're undervalued short term and long term, and also on the weekly chart. Most of the time, if you look at the last time it happened on a weekly time frame, this was 2025 November, and again it's happening right now, May 2026. So if you look at this area, I'll say I'm interested to go long on this particular asset because it's undervalued and I have a higher time frame demand. I'm trading the weekly demand. You can prefer to trade the daily demand, but you can see it's covered by the monthly slash weekly demand. And again, we are undervalued as an additional confirmation. Now, apart from that, right, can remove that. Now, apart from that, we can look at the seasonal focus. The market has a seasonality focus, and in our tools, we can look at 60 days focus in the future and see what's likely to happen. So let's see. So right now, this one is a 5 years seasonal focus, and when you look at it, we are focusing like 60 days in the future, and we are looking forward for the rally. You can see this was the previous focus, and we get the rally, the drop, we get the rally, the drop, and now we're looking forward for another rally. Guys, I don't know when this rally will happen. We're just looking at it, anticipating, and looking for things that point out the probability. Remember, my concept, I'm trading the market conditions. The more conditions are met, the more I'm willing to put in a position. So look at this. We're looking forward for another rally, but nobody's sure when will it happen. Now, when I go to the daily chart, right? When I go to the daily time frame and I'm putting in, let's just put this tool a little bit lower. Let's go a little bit lower. Now, if I squeeze in this chart, what am I getting here? That I'm likely to get the rally from where's the current market? The current market is here. Sorry, current market is around this area. Let's zoom in closely. Current market is here. So if I look at the current market and we see the low is likely to happen around, say, we are being told like second week of June, but I don't think this is just like a focus of what will happen. It's not like it doesn't have to be perfect. We don't have to wait all the way there, but what we need to do is now just to position ourselves. So I'll say this, when I look at this market technically now, point of correction, technically, this is the demand that I'm willing to trade, the weekly demand, but I've said that for you, you can go for the small daily demand that's down here. You can see this red candle here, drop base rally. You can take that one. Personally, I'm comfortable with the weekly chart. I'm comfortable with this weekly demand here because it's covered by the monthly time frame. So how am I going to position myself here? Remember, the market right now is closed, but it's going to open next 2 hours, I think. So say this, I position myself here. Okay, then here. Now here. That's where my entry will be, my stop. I need to correct this when the market opens. Hope it will not open with a gap to the downside because I already have a pending order, but that order should be pushed a little bit. So here, entry, stop goes here. And guys, you should understand, we are trying to catch a falling knife. We don't have a strong flow, so we have to be very, very careful with this trade. So the market, once it's there, of course, the first target could go almost to that area. Stock market, most of the time they buy. So this Like my first target is just 6R. And guys, let's see how the market will move. Most of you maybe are using brokers that don't provide stock trading, but if you can get a good broker or you have a good pro firm that allows you to trade this type of assets, you'll often get more assets, more setups easier than when you're trading currency or commodities. Otherwise, guys, see you on the next video.